Hello, everyone. Welcome to the next edition of Investment Management Foundations. My name is Gary Quinzel, VP of Portfolio Consulting at Wealth Enhancement Group. Today's topic is why you should consider municipal bonds as part of your investment portfolio. So first off, let's talk a little bit about yields. On an absolute basis, municipal bonds, like all bonds, are trading at much higher yields than they have in decades. All right? A big part of that is the recent rate hiking cycle that the Fed has embarked upon as part of its efforts to stem inflation, which of course was at 40 years highs. So we have a much different yield environment overall, which creates tremendous opportunities for fixed income investors that can just buy bonds and clip coupons over the long run. And though the timing is still quite uncertain, the current messaging from the Federal Reserve suggests that the next rate move is expected to be down and not a hike. While we don't know for sure, that seems to be the current outlook, which would be a positive for bond investors of any type, whether it's a taxable or tax-exempt bond. Now, why consider municipal bonds as opposed to other types of bonds? Well, for one, municipal bonds pay out income that is tax-free. Most investors that are looking for ways to negate their overall tax bill find the tax-free income of municipal bonds very compelling. And as you may know, back in 2017, the Tax Cut and Jobs Act enacted legislation which brought down overall tax rates. That legislation is set to expire at the end of 2025, which has really lifted the demand for investors as ways to find tax-free investments. There's also been a number of states that have changing tax laws, especially those high income tax states, where corporations are now getting into the game and looking for tax-free income as well. So there's incredible demand out there for these tax-free municipal bonds. So when we think about what drives the price of a stock or a bond or any investment, it's often driven by supply and demand, and supply has not been as much as demand lately. We're expected to see around $400 billion in issuance in 2024, which is up slightly from last year. However, it's expected to be net negative overall. So we're expecting to see higher demand, which has helped push the price of municipal bonds to multi-decade highs. As we can see on the screen, we have a graph that demonstrates the ratio of the yield that investors get from municipal bonds relative to that of the broad Bloomberg Barclays Aggregate Bond Rate Index. When that graph gets really high, basically what that means is that municipal bonds are attractive relative to taxable bonds. When it gets really low, we can see that on a relative basis, the relative yield that you're getting in comparison to what you're getting on a taxable bond isn't quite as attractive. And as we know, yields and prices move in opposite directions. So when prices are high, yields are low. And so on a relative basis, we're not seeing a ton of extremely attractive opportunities, but there's a really important consideration when thinking about when you should invest in municipal bonds, because it's not what you make on a bond, it's what you take home. And of course, I talked about the tax-free impact. So we have what we call the tax equivalent yield, which is really what investors should be thinking about when considering whether or not they should invest in municipal bonds. We have another chart here which demonstrates what the current yield you can get in the broad Bloomberg Barclays Municipal Bond Index, and then it demonstrates what the taxable equivalent yield would be out to all the different current federal income tax brackets. And as we can see, the further you go out for tax brackets, the higher the taxable equivalent yield it can become. So we can see even relative to what you can get from taxable bonds, the taxable equivalent yield becomes that much more compelling. So really there's a case to be made that any investor should consider adding municipal bonds because of the after-tax impact. Another important consideration, as with all portfolios, is diversification. Municipals offer a lot of compelling features that are differentiated from other securities such as stocks and bonds. They have different credit features, they have different liquidity features, and there's really a number of opportunistic ways that investors can include actively managed municipal bonds, as well as a laddered municipal bond portfolio that can be created for income purposes. So we hope you found this useful, and hopefully you can join us again in our next edition of Investment Management Foundation. Thanks and have a great day.